All right, guys, hello, and welcome to the show. On today's episode, we have a non-recourse lender in the house, actually sitting behind the desk with me, Mr. Scott Gruber. He's the CEO of Bridge Memphis Capital, and we do a lot of business with Scott. So if you guys are not familiar with the term non-recourse lending, aka the only kind of financing you can get for a foreign investor or a self-directed retirement fund, then you definitely should check out this episode. This was obviously a pre-recorded interview I had to do last week, but the good part is, hey, you got some visuals, so I'll be able to share this on YouTube as well. I hope you guys really enjoy it. Stay tuned and check it out. All right, guys, we have here with us Scott Gruber. Scott is the CEO of Bridge Memphis. They are a lender, correct?
Correct.
They do all of our non-recourse lending. So when someone comes to us and they're a foreign investor and they need non-recourse financing, or they come to us and they are using self-directed retirement funds, Scott is the person we call. And so he does primarily all of our stuff when it comes to that. And I wanted to bring him in today and just kind of let him explain to some of our viewers what non-recourse lending is, because a lot of people are very comfortable with the term conventional loan or FHA loan, but when it comes to investment properties and it comes to foreign investors and people who cannot risk their personal assets, such as a retirement account, we do a non-recourse loan. So I'm going to let Scott kind of explain to us a little bit about just the basics of what a non-recourse loan is and your overview.
Well, Carl, first of all, I want to thank you for all the business that y'all have done with this, because y'all have been great for us, and your clients have had real success, and repeat customers is the best compliment of all. So thank you very much for
Absolutely.
that. So when you work with Bridge Capital, you've entered the world of alternative lending. So when you can't come to a bank, and you need a loan, you're going to have to go to an alternative lender, and that's really kind of where we step in. And you correctly pointed out two of our biggest niches. One is people that are trying to borrow in their self-directed IRA and 401ks, and international people that are trying to buy U.S.-based properties. So that is our space. And what we try to do in that situation is we try to assess what the borrower's needs are by looking at the properties they want to do. So we are 100% non-RESP. In other words, we're looking for non-owner occupied stuff. And then people that are trying to buy these properties for investments, that's where we step in. And what we try to do is we try to give them a property, a loan that matches the property that they're trying to purchase. So we look at the value of the house, we look at the anticipated rent, we back out for management fees and vacancies and things like that, and then we try to give them a loan so that they have the confidence to know that the cash flow of the investment is going to pay off the loan.
Okay.
And we've had real good success with that over the 8 years we've been in business.
8 years. Okay, so that brings me to another point. So Scott and these guys have been in business for 8 years now. So I spoke with him before the interview just to touch on a couple things. So in 8 years, they've done about 8,000 properties. And they do about $4 to $5 million in deals a month. So just to give you guys kind of an idea, they are definitely one of the larger groups we deal with. I think a lot of our business-to-business clients also use you guys too.
Absolutely.
We've actually made some business-to clients
Absolutely.
through you guys. And then also, they've got about 1,200 loans out right now that hold about 1,800 properties. And in that 8 years, here's what's great to me. Like I love when you said this to me. In the 8 years that they've been in business with all of these different loans, 8,000 properties, they've only had 5 defaults. Now, why do I bring that up? I bring it up because, a lot of people only care about getting that fee or that whatever, getting that deal done so they can get their little bit of money. You guys care much, much more about the client or the customer's personal situation. Are they really, truly able to afford this payment? Do they need mailbox money? And I feel like you guys really underwrite the deals for the best benefit of who the buyer is.
Right, so we're not a bank.
Yeah.
So that gives us the liberty of doing something that banks can't do, which is we take a common sense approach. So we try to help.
Common sense is something banks can't do. I'm just letting you know. I'm backing that statement.
Right. So there's a lot of good investor transactions out there that just aren't suitable for banks for any number of reasons. And that's really where we step in. So the reason that, like you yourself said, we have 1,200 loans on 1,800 properties, because where we have the best success is an investor comes in and they're thinking about buying real estate. It's a natural decision for them, because what's happening is, if you look at the two main markets, which is going to be the stock market and the bond market, the stock market is, over the last 5 years, has really gone nowhere, but it's been a very volatile ride to nowhere, and people don't really enjoy that roller coaster ride.
Yeah, it's stress.
Right, and in bonds and CDs, there's no return. So people are naturally migrating towards single-family rental homes. It's the vanilla of real estate. Over 50% of the world's wealth is held in real estate. So it's a nice entryway for everybody to get in.
Yeah.
It's not hard to understand. So when somebody comes to us, a lot of times they don't even realize that financing is available. So let's say they're looking at buying a $150,000 house for cash. What we do is we allow them to take that investment and maximize it. So instead of paying cash for one $150,000 home, they can now buy two homes using that $150,000 that they had already planned on spending, investing, as the down payment. So when they do that, we just put multiple properties on the single loan, and I think our loan count is a byproduct of what you and us try to help investors do.
Yeah, absolutely. So when it comes to your typical client, so again, obviously you have the foreign investors, you have the people using self-directed retirement funds. So let's say, I'm Bob, I have a construction company, I own a home, I might own a couple rental properties, I have some income, my DTI is high, or maybe I just got divorced and my credit score is kind of poor, but I have a financially stable situation. And I want to invest and I want to leverage that investment, but I really can't through a conventional route. Is that something that you look at typically and see if you can help a person in that situation?
So some people will come to us for credit repair, but here's what we say. Don't say no for us. We're in the business of trying to make loans. So we look for a common sense approach, and we realize people have things in their lives that will set them back if you're just looking at just the credit score. But a credit score doesn't tell the whole story.
No.
People have medical emergencies. People have had issues in the last economic downturn. We generally can work through those things if a borrower is going to talk to us. And the reason that we're so good at working through them is we are trying to work with the best of the best turnkey providers like yourself.
So you know it's good assets.
So we're looking at the quality of the asset first. So if we know that the asset is good, the rehab is good, and the management is good, then the credit worthiness of the borrower really takes a back seat to that. And so by taking the asset underwriting first and the credit underwriting second, because we will look at both, we generally can work through any issues that may come up.
Yeah, and I like how you said a lot of that has to do with the quality of the provider. So if I'm providing someone a great asset, your typical, what is your typical down payment for a home? If
40 to 50%.
Okay, so 40 to 50%, right? So you obviously, if you're spending $100,000, now you can spend $50,000 and $50,000 and get two homes. But the point I was trying to get to is, when it comes to the quality, and you're lending on something, and you're 50 or 60% into this property. Worst case scenario, obviously we don't want anybody to ever fail, but if they did, it almost eliminates your risk. It's
right,
almost like, oh, great.
Right, and the reason that we've had so few failures over our 8-year history is we really try to take a very high-touch situation, and what we ask, your client is our borrower, okay, and what we ask them to do is communicate with us. Things happen. But with the equity that they have in the home, we can generally help them work through the situation. So if it's a repair, we can generally get that work through. And so we've been able to, it does come up from time to time, but we really take seriously a successful outcome for the investor, and
that's good,
and it shows. And it shows. So what we try to build is like-minded relationships. So we want to work with turnkey providers such as yourself, where you're kind of poised for investor success. Our business is built on investor successes, not investor failures, and we try to build relationships where that's the value.
Yeah, and to touch on that point also is. It's funny you say that, because the relationship that we have is obviously a good one. Scott comes to a lot of our events. We do bus tours, we do speaking tours. Sometimes we do little seminars for people to educate them on the power of their IRA, or what they can do by having a self-directed account and purchasing and leveraging real estate. Scott comes to a lot of those things. And, one thing that stuck out to me, Scott, honestly, because I'm an extremely ethical person. I'm not here to burn bridges being 31 and in the position I am. I want to make sure that I secure my reputation. I remember some time ago, we deal with a lot of brokers. We have brokers globally. And you had a client that got sent over from one of our brokers. And you turned down a loan, and I thought that was interesting because that's not very often that I see that. And then when I kind of dug a little deeper, I said, well, why was this loan turned down? And looking through it, and I called Scott. I just said, hey, just let me know. I understand if it was turned down, there's probably a good reason for it. The reason is because the person was about 75 years old or something like that, right? And it was like, well, yeah, he's investing this money, but is he really in the right position to invest this money? Like, is he, you know what I mean?
I'm not saying we're right 100% of the time.
No, but I mean, that goes to show that you have that person's best interest in mind. But, like, is this something he's going to be...
Right. So we're comfortable with the asset, and we're comfortable with the borrower. Mm-hmm. But some people just shouldn't borrow.
Yes.
And so...
But not a lot of lenders will tell you that because they want that business.
Well, our approach is, so you talk about your reputation at 31. Well, I'll talk about mine at 55. At this point in my career, one loan is not going to make a good month bad or a bad month good.
Yeah.
But one failure will, cause a lot of indigestion for us. And so I have the benefit of liking what I do, and I like helping people.
Yeah.
And so we, as an alternative lender, we can take, and you'll hear it time and time again as you work with our organization, we can take a common sense approach. If it makes sense, we'll do it.
Which is good. I tell you guys, there's a lot of people out there that run very bureaucratic systems, including the banks and a lot of different people. When you deal with a company who is willing to work with you and actually have your best interest in mind and look outside the box and look at your situation as a unique situation and not just as another number coming through the door, that says a lot about the company. And so those are the type of people we obviously like to affiliate with. We've had a tremendous amount of success dealing with Scott. He has gone over and above for us. Honestly, I can't say enough good things about him. He actually... You're one of the only people, I think, that asked me for a copy of the magazine and then actually have it hanging in his office. So, it's been great dealing with you guys and working with you guys and your team. You've been phenomenal. I really genuinely appreciate all the things you do, not only for our clients, but for us, bringing the packages to give to our clients and helping us with a lot of these different things and just being there for us to just help educate, because it's not, it's not my space to educate. And when I need somebody to lean on for that, in the expert field of what you do, you're definitely always there and willing to help. So I definitly appreciate that.
Thank you, and you're very gracious in the nice things that you say, but I will turn around and give you the reciprocal version of that. While you're not the only relationship that we have, as I know you'd like to make that happen, we don't work with many turnkey providers. What we really try to do is give our best efforts to the best turnkey providers, because what we realize is while you can make our business better, we can make yours better. And what we really do is we're very proud to say that our relationships are the best of the best in this investment real estate space.
Yeah,
and
I agree.
And our commitment is not trying to find more relationships; it's trying to build better relationships.
Yes, I agree.
So we think the world of you, and we work
that.
with you in several markets, and it's a privilege on our part as well.
Thank you so much, Scott.
Thank you.
Thanks for being on.
Thank you.
Thanks, guys.
Behind the Desk is brought to you by American Real Estate Investments, the 2016 Turnkey Provider of the Year.